Most people think wealth requires dramatic action, a brilliant business idea, a huge investment, or a lucky break. But most millionaires didn't get rich that way. They built wealth through something much simpler, a small habit, repeated for decades. Research from Fidelity Investments found that consistent investors, people who invest regularly over time, are far more likely to accumulate significant wealth than those who try to time the market. Why? Because consistency activates the most powerful force in finance: compounding. Small contributions begin slowly, almost invisibly, but over time, the results accelerate. If someone invests $400 every month with an average annual return of 7%, they could accumulate over $1 million in about 40 years. Not through luck, not through speculation, but through disciplined repetition. The quietly wealthy understand this principle deeply. Take Jack Bogle, the founder of the Vanguard Group. Bogle spent his career promoting a simple idea: invest consistently in low-cost index funds and hold them for the long term. At the time, many experts dismissed the strategy as boring. But over the decades, millions of investors who followed his philosophy quietly built substantial wealth, because the market rewards patience more than excitement. Another example is Sam Walton, founder of Walmart. Walton focused relentlessly on small improvements, lower costs, better logistics, better pricing. None of these decisions seemed dramatic, but together over time, they built one of the largest retail companies in the world. Small habits compound in business just like they compound in investing. Yet most people struggle with consistency. Why? Because the early results feel unimpressive. Human psychology prefers immediate rewards. A study published in Behavioral Decision-Making found that people consistently prioritize short-term gratification over long-term gains. In other words, we prefer a reward today, even if waiting would produce a much larger reward tomorrow. The quietly wealthy resist this impulse. They automate good habits: saving before spending, investing before upgrading their lifestyle, improving skills before chasing status. These actions feel small, but over time they transform financial trajectories. The real secret of wealth isn't dramatic success. It's sustained discipline, tiny actions repeated thousands of times. Eventually, the results look extraordinary, but the process was always simple. Quiet wealth is built the same way trees grow: slowly, silently, and then suddenly, very large. If this shifted your perspective, like the video, it helps this message reach people building quietly instead of performing loudly. Subscribe to Quiet Wealth. We don't chase fast applause. We build invisible advantages. And let time do the heavy lifting. See you on the next episode. Stay wealthy.